Cathie Wood, the CEO and CIO of ARK Invest, is most famous for her bet on Tesla, which distinguished her as one of the greatest investors in the new decade. However, alongside Tesla, she has also made numerous successful investments in many other companies, including early investments in Square, Roku, Zillow, and the entire genomics sector. Most recently, she and her firm ARK Invest has been betting big on one stock that has actually risen to become ARK Invest's second largest position in the entire firm. In total, ARK Invest has over $2.4 billion worth of this one stock. In this video, I will cover what this stock is and why Cathie Wood is so confident in this company. Welcome to Casgains Academy. If you're new to the channel, please consider subscribing for more content like this, and let's get right into it. The company that I'm going to be talking about today is a disruptor of a sector you might think can be disrupted, and that's doctor appointments. Think about how much time you spend on doctor's appointments. Doctor's appointments require you to schedule a specific date and time, drive to a certain location, and sometimes even make you take some time off from your job. When you get to your appointment, a lot of times you get some information you could have gotten in 5 minutes. All of this is going to be disrupted by a company named Teladoc, which trades under the ticker symbol of TDOC. Over the past 5 months, ARK Invest has continued to purchase more and more Teladoc shares, and now owns $2.4 billion of Teladoc, which is over 8% of the entire Teladoc stake. ARK's huge position in Teladoc is there for a reason. The main product that Teladoc offers is an app that allows you to connect with a state-certified doctor in a few minutes. That's right, you don't have to spend hours going to a doctor in person. All you have to do is enter some medical information, select whether you want to do a video or phone call, select your time, share some pictures if you'd like to, and choose a pharmacy. This process allows you to quickly describe your situation to a doctor and get the correct medication at a nearby pharmacy, done and dusted within a 10-minute span. Without insurance, the cost per visit is $75, but with insurance, costs can go as low as $0 per visit. Another disruptive portion of Teladoc is from a company it recently acquired for $18.5 billion, and this company is called Livongo. Livongo is a health monitoring app that tracks your blood pressure, weight, and other health factors to a variety of devices. Using these factors, Livongo tells you the exact time where it's helpful to exercise, rest, or breathe. This is especially helpful for those who want to manage their weight, check their blood pressure, prevent or manage diabetes, and improve their stress, sleep, and anxiety. All of this is done through expert coaching calls, meters and scales, free unlimited supplies, and progress reports. The acquisition of Livongo secured Teladoc's position as a one-stop shop for healthcare, and not surprisingly, opens up a huge investment opportunity. Teladoc is in a unique opportunity to grow tremendously fast over the next decade. From 2016 to 2020, Teladoc's revenue grew 70% year over year, and its recurring revenue grew 80% year over year. And while the pandemic accelerated this growth temporarily, many of the new users of Teladoc will continue to use the service. The reason why I'm confident in continued growth after the pandemic is because of Teladoc's Net Promoter Score. The Net Promoter Score, or the NPS, is a number that shows what percentage of customers are loyal to a company. There are 3 categories that customers can be in: the detractors, which are those that are unhappy with the product and will spread negative information; the passives, who are satisfied but are vulnerable to buying competitive offerings; and the promoters, who are loyal enthusiasts that will continue buying the company's products and referring others. The NPS is calculated by taking the percent of promoters and subtracting it by the percent of detractors. For example, if 70% of customers were promoters, 20% were passives, and 10% were detractors, then the Net Promoter Score would be 70 minus 10, which is equal to 60. The Net Promoter Score determines how great of a product is and whether the network effect will occur for a company. Teladoc's personalized healthcare portion has a Net Promoter Score of over 60, which is quite strong given that the product has appealed to the general audience rather than a small group of fans. This positive experience is driven by the company's constant feedback loop. Teladoc's AI program is able to take in data from its wide range of customers in order to give personalized insights. With better personalized insights, Teladoc gets more customers, leading to more data, which leads to better personalized insights. This recurring feedback loop leads to faster and faster growth over time. The portion of Teladoc that I'm very bullish on is Teladoc Primary 360. Teladoc Primary 360 is the portion of Teladoc that allows users to track their blood pressure, weight, and other statistics on the app. This service just got even better after the acquisition of Livongo. The one statistic that makes me extremely bullish is Teladoc's primary Net Promoter Score of 95. A Net Promoter Score of 95 is absolutely mind-blowing and shows that the product sells itself. To put that rating into perspective, the market leaders in NPS scores are Netflix, Starbucks, Amazon, Airbnb, and Tesla. Teladoc Primary's NPS score is so high that it rivals Tesla in the mid-90s. As some of you know, Tesla does not advertise because the product speaks for itself through word of mouth and customer retention. Teladoc Primary 360 is on that same scale and will continue growing for years to come. The initial outcomes have shown that Teladoc can successfully prevent, diagnose, monitor, and coordinate all types of health conditions. The product is also gaining lots of commercial traction with multiple new partners in January of 2021. Now that we clearly see that Teladoc has a compelling product, let's get into the company's growth drivers and competitors. One of the major growth drivers for Teladoc is the market it's in, which is telehealth. According to a recent report, the global telehealth market size is expected to grow 25.2% year over year by 2027. That is an extremely fast growth rate, especially for that long of a period of time. Teladoc has a unique opportunity not just to expand in the US, but also expand internationally. This includes Europe, Australia, Canada, Southeast Asia, the Middle East, and Brazil. Additionally, Teladoc also has plenty of white space to grow in the US. Teladoc already works with over 40% of the Fortune 500 companies for their employees and has over 50 US health plan clients. Because Teladoc already works with so many companies, there are many employees that could still use Teladoc in the future. This includes 65 million potential users and 182 million people that Teladoc could potentially work with, and this would be through direct-to-consumer methods or just partnering with companies. An even bigger growth opportunity is expanding Teladoc's revenue through multi-product adoption with existing customers. Existing consumers are using more and more of Teladoc's products, which increases Teladoc's revenue with little to no advertising. This has allowed for practically guaranteed revenue growth at 10% year over year over the past 3 years. Overall, Teladoc is expected to continue growing long-term after the pandemic. Its revenue is expected to grow 30 to 40% per year from today through multi-product expansion, international expansion, the growth of Teladoc Primary 360, and much more. Teladoc also has a gross margin that is consistently in the mid 60%, which will come in handy later when we get into valuations. Now we know that Teladoc has great long-term prospects, but what about competition? According to the Q3 2020 numbers, Teladoc had over 2 times more visits than its next competitor, which is a company named Amwell. Teladoc has proven itself to be the standard of the telehealth space. As you can see from this Google Trends chart, more people were searching Teladoc over the past 12 months than online doctor. Because Teladoc is the market leader in the telehealth industry, it allows the company to solidify its data and consumer advantage over other companies for more personalized results. Not only that, but Teladoc is also able to connect patients to doctors more quickly, since they have the advantage of having more doctors available. To top it all off, Teladoc's acquisition of Livongo officially marks a turning point for Teladoc, and this is to use its synergy to provide a one-stop shop that other competitors simply can't provide. Lastly, Teladoc also has plenty of patents in the telehealth space and is actually currently suing Amwell for directly and indirectly infringing its patents. Overall, Teladoc has solidified its place as the standard of telehealth, and it'll be difficult for other competitors to beat Teladoc's moat in this space. Now we must go over arguably one of the most important parts about analyzing a company, which is its valuation. Teladoc is currently priced at a price-to-sales ratio of 16, which is actually relatively low considering that its gross margin is in the mid 60% and will likely increase with the release of new software products. To put the valuation into perspective, the nearest competitor, Amwell, has the price-to-sales ratio of 24, and this is even though Amwell is expected to grow slower than Teladoc. Using a price-to-sales valuation estimate with analyst estimates for 2021 and 2022, and 20 to 25% growth in 2023 to 2025, I calculated an estimated valuation of $400 per share for Teladoc by 2025. Cathie Wood has stated that she only adds stocks that they believe can grow 2x in 5 years, so she likely has a similar if not more ambitious projection than what I just showed you. Also, keep in mind that although a 2x return in 4 years might not sound like much, it would still be roughly 20% per year in stock appreciation, which is difficult to find in today's market. Let me know whether you think Teladoc is a buy or sell in the comment section below. If you enjoyed this video, please hit the like button and don't forget to subscribe, and I'll see you in the next one.